Good morning, or good afternoon, actually. This is Larry McMillan with a stock market update on Monday, December 13th. It's afternoon because I had some other things I got tied up with this morning. Anyway, the market is in a very similar place to where it was in mid-November. S&P is right at its highs. In fact, SPX made a new all-time closing high on Friday, but the market internals are terrible. Market breadth was negative for the last 2 days. New highs were less than the number of new lows on the last 2 days. Put call ratios are higher. So all these internal factors are negative. But SPX and VIX are merrily on their way. VIX collapsed on Friday. It's bouncing back a little bit today. So, the jury is still out on this rally. Probably the main thing the bulls have going for them is that it's near the end of the year, and typically we don't get very heavy selling at the end of December. I know we did in 2018 up through Christmas Eve, and then we had a strong rally after that, a very strong rally. But we got oversold, and by like say December 3rd, and we've bounced back very strongly since then. So the oversold conditions are gone, but it didn't improve the internals any. IWM, the Russell 2000, is falling behind, and in fact, the Dow and Nasdaq 100 (QQQ) are also trailing SPX now. So it's really narrowing down to just a few of the biggest, highest, largest cap stocks that exist. And that's not really a good plan going forward for the bulls. But as long as it holds together, I guess, you have to go with the flow. In any case, this could be the top of a trading range, though. And so we are trying to sell the top of the trading range. We would reverse and go long if the market closes above Friday's high. Just to look at individual indicators, as I said, the equity only put call ratios are still rising. There's plenty of put buying going on now, even on days when the market is up. And so that keeps those on sell signals. Market breadth is negative, but technically the oscillators did generate buy signals at the right around December 3rd, December 6th, maybe. And so that's a little bit of a positive, but if they can't really get something better than reading a negative number that's clinging to a buy signal, that's not really very positive either. New highs, as I said, have been dominated by new lows for the last 2 days. That doesn't create a sell signal per se, but if new lows increase in number, it will. Then to the other side of the coin, VIX. VIX and all the derivatives of VIX and all the indicators we have around that are basically bullish. There's a VIX spike peak buy signal in place as of, I believe, 29th of November. There's the trend of VIX is very much, it had turned negative. Now it looks like it's going to go back positive again. If VIX can close below 19, really more like below 1860, and hold there. The construct of volatility derivatives is also bullish, and that the term structure of the VIX futures slopes upwards. So all of the things having to do with VIX are mostly bullish, and that's where the market has been really for maybe the last 6 months. We see terrible internals, but VIX is not signaling any problem, and SPX keeps making new highs. So take your pick, I guess. But we are trading confirmed signals as they occur. We do not have a core position either way at the moment. We're not core bullish long because I would need to see a close above Friday's high in order to do that. And I'm not core bullish short either because we haven't really broken that support. The next support level is 4,500. So it should be perhaps not really interesting until January, but it could be interesting in the next couple of weeks. So I invite you to visit our website, take a look at our newsletters where we follow all of these things daily. And meanwhile, have a great week trading.